If you look at the volatility in the market around names that don't pay dividends, they're extremely volatile because there's no cushion of yield. What's the value of a stock that never returns capital to its shareholders? I don't know, because the only way you can make money is if somebody else is willing to buy that position at a higher price for some emotional reason perhaps, or for some foresight that maybe the company will return capital one day. And I think of when you learn as an investor over multiple decades is the only thing that matters is free cash flow. That's it. There is no other reason to own a stock. And with that philosophy, it brings you into a place where you focus on a company's ability to generate incremental cash flow, because just owning a dividend-paying stock is not good enough. Because let's say we find a stock today that's paying a 3% dividend yield, and tomorrow, because its forecast for sales get cut in half, the stock drops by 50%. Now it's yielding 6%. I don't want to own that stock either. So my tests in this index that I've created with FTSE Russell looks at the balance sheet. Every year we test to make sure that the company is viable in its ability to generate cash. This is extremely conservative investing. This is for the long haul. These tools are not for, as you're suggesting, for spicy, the hot stock du jour. I've done that, I've been there. Let the young legs do that. I have zero interest in that. I don't care what the hot new stock is. When a company comes public, I won't own it either. It's got to prove to me over multiple years that it can continue to generate cash before it even fits into what I'm doing. So I'm really boring, and I like it that way. I mean, I can't even imagine buying a stock that doesn't pay a dividend. Why would you do that? What would be the reason you would do that? I don't get it. So to me, that means about 28% of the market, to me, is just speculation. A stock that doesn't pay a dividend is a speculation. It's not an investment. You remember back in the late 90s, I'll use one example, Toys.com. I was an investor in Toys.com. I went to zero, never made any money. And I grew a little 4-inch Charlie Munger on my shoulder when that happened. And he appears, you can't see him, but he's on my shoulder every time I'm getting pitched a deal like Lyft or Uber. And Charlie says only one thing: if it has no cash flow, just say no. And I have listened to my little Charlie ever since the late 90s, and I've been right 100% of the time. This company is valueless. It doesn't have any cash flow. It's a speculation. It's no different than putting your money down on red or black in Vegas than giving money to one of these losers.